Investing in dividend-paying companies is a popular technique for producing consistent income while potentially profiting from capital appreciation. But what if you could participate in the activity without breaking the bank? Many investors ignore cheap equities, yet some of the finest dividend-paying prospects are found in companies priced under $15. This video will look at 5 high-quality, low-cost dividend companies, delving into their past performance, financial health, and prospects. Number 1. Ford Motor Company. F. Ford Motor Company, a mainstay of the car industry, is well known for its generous dividend distributions and long-standing market position. Ford, with a price of less than $15, is an appealing investment choice for individuals seeking both growth and income. Ford's stock has had its share of ups and downs throughout the years, owing mostly to changes in the automotive sector and economic cycles. Despite this volatility, Ford has consistently paid dividends. For example, in 2014, the firm reintroduced its dividend, which had been halted during the financial crisis and has continued to pay dividends since. Ford's stock price has seen substantial growth, including a peak of more than $30 per share in the early 2000s. However, the 2008 financial crisis had a major effect on the automobile sector, forcing Ford's shares to drop. Despite these problems, Ford's strategic management and emphasis on innovation have enabled the company to recover and continue dividend distributions, especially during challenging periods. Ford's financial stability is supported by robust cash flow and a stable balance sheet. The company's innovative cost-cutting strategies and investments in electric cars have increased investor confidence. Ford's capacity to produce significant cash flow from its activities has been important to continuing dividend payments. Ford has recently made major investments in electric and self-driving cars, preparing itself for future success in the changing automotive industry. These strategic investments are intended to promote long-term development and improve Ford's financial health, laying a strong platform for future dividend payments. Ford's annual dividend yield currently stays at 6.15%. Number 2. Pitney Bowes Incorporated, PBI. Pitney Bowes Incorporated, founded in 1920, is well known for its mailing and postage solutions. Historically, the corporation had substantial expansion and acquired a dominating market position until the mid-20th century. Pitney Bowes has seen significant change during the previous 10 years. Its firm experienced issues in 2010 as demand for conventional mailing solutions declined. Its stock price remained around $20, but it started to fall owing to declining sales and increased competition in digital solutions. Pitney Bowes diversified its services between 2011 and 2015, investing in digital commerce and e-commerce solutions. During this era, the stock price fell to about $10 by 2015, reflecting the difficulties in shifting its business model. Despite these issues, Pitney Bowes continued to pay dividends, which were lowered from $0.375 each quarter in 2012 to $0.1875 in 2013. In 2016, the company's transformation approach began to produce favorable results, and its stock price increased to roughly $16 by the end of the year. Pitney Bowes' dividends were constant as the firm concentrated on increasing profitability and efficiency. From 2017 to 2019, the stock price ranged between $10 and $12, reflecting continual market fluctuations and the company's attempts to innovate and simplify operations. The dividend yield at this time was about 4%, making it appealing to income investors. The 2020 COVID-19 pandemic had a huge effect on Pitney Bowes, leading its stock price to collapse to about $5. However, the firm responded by improving its e-commerce and shipping capabilities, which gained popularity during the pandemic-induced e-commerce boom. By 2023, Pitney Bowes shares had steadied at $5, with a 3.8% dividend yield. The company's continued investments in technology and e-commerce, along with an emphasis on operational efficiency, have set it up for a possible recovery and growth in the next few years. Pitney Bowes' annual dividend yield currently stays at 3.42%. Number 3. Sentry Link Incorporated, LUMN. Sentry Link, a well-known telecoms business, pays a strong dividend yield and is now selling for less than $15. It makes a compelling argument for investors seeking consistent dividend income from a stable business. Sentry Link's stock has struggled in recent years owing to industry rivalry and technological advances. However, the company's dividend distribution has been stable, reflecting its commitment to returning wealth to shareholders. For example, Sentry Link has paid consistent dividends despite financial restructuring attempts. Despite confronting rising competition and technological disruption, Sentry Link has been able to maintain dividend payments via strategic investments and operational efficiency. The company's emphasis on improving its service offerings and growing its network infrastructure has increased its financial stability and capacity to pay dividends. Sentry Link's financial stability is supported by its massive network infrastructure, consistent revenue streams, and careful cost control. The company's emphasis on debt reduction and operational efficiency strengthens its capacity to maintain dividend payments. Sentry Link's strategic attempts to improve its service offerings and develop its fiber network have boosted its market position. The company's strong financial management techniques and dedication to debt reduction strengthen its capacity to sustain and increase dividend payments. Sentry Link's emphasis on growing its fiber network and improving its service offerings is consistent with industry trends and customer demand. These strategic objectives, along with Sentry Link's commitment to financial stability, make it an appealing investment for dividend-seeking investors. Number 4. B&G Foods Incorporated, BGS. B&G Foods, a prominent maker of branded food goods, has a high dividend yield and is trading below $15. It is an appealing investment option for individuals seeking consistent income from a protective area. B&G Foods has a robust dividend history, which is underpinned by consistent sales and cash flow from its varied product line. The company's ability to pay dividends regularly, especially during economic downturns, demonstrates its strength and dedication to shareholders. The company's smart acquisitions and concentration on extending its product line have resulted in revenue growth and financial stability. B&G Foods' capability to produce stable cash flow from its varied variety of food goods has allowed it to sustain and increase dividend payments throughout time. B&G Foods' financial health is supported by excellent cash flow, reasonable debt, and smart acquisitions that expand its product lines. These elements contribute to its capacity to maintain and increase dividend payments. B&G Foods' strategic emphasis on expanding its product line and improving operational efficiency has strengthened its financial position. The company's dedication to maintaining a stable balance sheet and providing regular cash flow reinforces its capacity to make dividend payments. B&G Foods' annual dividend yield currently stays at 8.78%. Number 5. Prospect Capital Corporation, PSEC. Prospect Capital Corporation, a business development firm, has a high dividend yield and is priced below $15. It makes a compelling argument for investors looking for substantial dividend income and exposure to a diverse portfolio of investment choices. Prospect Capital has a track record of producing good dividend returns, yet its stock price may fluctuate owing to changes in the economic climate and credit markets. Despite these hurdles, Prospect Capital has continually paid dividends, delivering significant revenue to its stockholders. The company's capacity to produce continuous cash flow from its diverse array of assets has allowed it to sustain and increase dividend payments over time. Prospect Capital's strategic management of its investment portfolio and emphasis on return maximization have been critical in maintaining dividend disbursements. Prospect Capital's financial health is underpinned by a diverse investment portfolio, rigorous risk management, and a commitment to maintaining a solid balance sheet. The company's dedication to creating steady cash flow strengthens its capacity to make dividend payments. Prospect Capital's strategic efforts to diversify its investment portfolio and improve its risk management methods have improved its financial situation. The company's strong economic management techniques and dedication to retaining financial flexibility bolster its ability to make dividend payments. Prospect Capital's annual dividend yield currently stays at 13.1%. Investing in dividend-paying companies under $15 provides a unique chance to earn consistent income while potentially benefiting from capital gain. Diversifying among these sectors allows you to develop a robust portfolio that optimizes income and capital growth possibilities even with a little investment. Before making any investment selections, you should always undertake comprehensive research and examine your financial objectives. Don't forget to smash that like button and subscribe to receive more financial updates.